So you've probably had something like this happen to you in the cryptocurrency bull markets. Your mother-in-law calls you up and asks you,
Hey there, should I buy this Trump crypto coin that I just heard about on the news? Maybe I should put $1,000 into it. What do you think?
or dog coins, or whatever. You say, look, mom, I'm not a financial advisor. Such questions are not easy to answer. But where do you start on what kind of coins you should be investing in and how you should be approaching investing in the cryptocurrency market? Well, let's divide the answer today by age group, starting with your 20s, because depending on where you are in life, you're going to have a different approach to risk. And at the end of the video, we'll get into the advice for your mother-in-law, by the way, who's probably in her 60s. But before we dive into age groups, I can give you the type of financial advice that is very common and very sensible. Not professional financial advice, obviously, but call it the principles of good financial sense, which remain pretty universal and apply to all age groups, which is to avoid consumer debt, maintain an emergency fund, set aside money for taxes, okay? The basics here. But we're going to dive into some crypto specifics that I think may be really useful for you, okay? And these are some very important, but also non-surprising piece of advice that are out of the way now, okay? So let's get into the crypto specific stuff. And by the way, you can skip ahead to whatever age group you're in, what's gonna be most relevant for you. So in your 20s, my advice is to go all in on economic and employment trends and take lots of risks. So learn aggressively about these new trends. For example, AI and crypto. If you're in your 20s and you're not all in on AI and crypto, I have no idea what the hell you're doing with your life. Prioritize developing skills in areas such as coding, trading, analytics, how to use artificial intelligence, how to sell things online, how to read charts, how to find on-chain alpha. You can work as a crypto exchange marketer. You can do copywriting or any other kind of stuff, okay? Consider roles in growth-related fields with growth potential startups. So look for startups that might offer you equity or some kind of token compensation. Also, network relentlessly, okay? Your network can equal your net worth. Okay? Build a strong network within the cryptocurrency community, join online forums, attend meetups, go to conferences, actively contribute on X, find value, provide value. Opportunities often arise from those kind of connections for all kinds of stuff. You'll get early alpha and opportunities to invest in early stage startups, all kinds of stuff. So focus on being genuinely helpful and knowledgeable. Maybe your career bet won't play out as you hoped, but you're probably gonna learn a hell of a lot along the way. Maybe your crypto company you're working for goes bust. Maybe you realize the marketing isn't for you. That's okay, you're only in your 20s, and the 20s are for getting things wrong and learning, okay? Because no matter what happens during that time, you're gonna learn a massive amount and upskill a lot. You're gonna learn about who you are as well, and you can blow up and start again, which means you can take risks on meme coins, you can take risks on AI agent coins and put large amounts of your portfolio in it, because you can always make money back later. And when it comes to that investing, your focus should be on a few concentrated bets. It's okay if not all those bets play out as you hope, but you're allowed to take some riskier bets here. You can still make those mistakes. Invest in those higher risk tech stocks, invest in those higher risk cryptocurrencies. Around this age, if you only have a few $1,000s to invest per year, you probably don't want to be BTC only. Not saying don't buy some Bitcoin, okay, but not Bitcoin only. It's too safe. Okay, sure, you can dollar cost average a part of your portfolio into Bitcoin, Ethereum, Solana, whatever, but you probably want to allocate a pretty decent chunk of your portfolio to things that are much higher risk with much higher reward potentials. Again, low cap altcoins, maybe even NFTs, meme coins, AI agents. You have time on your hands, so go out and farm the living heck out of airdrops, man, which can, of course, bring back significant returns with minimal upfront investment. Take the risks, put in the work, get on chain, okay? So in your 30s, you've learned from your experiences, your wins, your losses. You should now have a feeling for your strength in terms of your professional skills, and it's time to double down on those and to leverage them. So for example, let's say that you've been working as a marketer, okay, for a cryptocurrency exchange in your late 20s. You got some great skills from doing that. You've learned about the cryptocurrency sector. You've learned about the customers. You've got your own strengths and weaknesses in terms of how you approach marketing and your ability to use artificial intelligence. You've made some pretty strong connections during that time with people from other exchanges and influencers and all that kind of stuff. Now, suppose you hear about a startup in the cryptocurrency field. Well, you can go apply for a position there, help them grow, get some equity in the company, ideally, right? So you can benefit from any upside that might have in the future, get some stock options, right? What about investing? That's the professional life side of things, right? What about investing in crypto in your 30s? Does it change from your 20s? Well, Yes and no. So look, assuming that you've built some kind of wealth during your 20s, and most people haven't, so if that's not you, then don't be too hard on yourself. Most people are still paying down student loans and all the rest of the BS. But if you've managed to build up some kind of wealth, you've been investing in stocks, you've been investing in some Bitcoin, some Solana, a few of your lower cap altcoin bets paid off and you made some money. Now you can allocate slightly more of your portfolio to those more established projects. So whereas in your 20s you might have been like 10% Bitcoin, 90% risk coin, maybe now you're gonna be like 30, 40% Bitcoin and 60% into risk coins, for example. Well, keep researching, keep your edge, stay focused, stay in the market, maintain exposure to those speculative altcoins because you've played that game before. You got good at the game. You got a high score if you did well in your 20s. So why wouldn't you come back and keep playing the game? But now you're taking a little less risk. Now you can sleep a bit better at night because you know you got some Bitcoin stacked away. Maybe you've diversified out into a bit of gold, some index funds, stuff like that. Now in your 30s, you have all the skills. Let's start exploring some additional sources of income. Yeah, you can do some staking with Solana and Ethereum and stuff like that. But you can also, do stuff like affiliate marketing on the side, or maybe get your own side hustle going. Start your own crypto company even, okay? And of course, compounding is the eighth wonder of the world, so do find ways to make sure that you keep that money coming in. And don't forget about your gosh darn taxes, which is where today's sponsor comes into play, which is I Trust Capital. So with I Trust Capital, they are gonna let you bring in your retirement fund, because guess what? You're in your 30s now, you're not getting any younger, the 40s are coming, okay? This lets you take your crypto trading, wrap it into your retirement account. That can be your 401k, your 403b, or whatever your retirement account code is, depending where you live. And here's the deal. Because you've wrapped your trading in that retirement account, you can now do as many trades as you want, not any taxable events. 1,000 trades, all good, no taxable events. They got all the top coins, Bitcoin, Solana, Dogecoin. They list all kinds of new coins as well, and they're pretty quick to list new coins, so lots of opportunities there for you to do trading. 365, 24/7, unlike the ETF markets, of course. They allow in-kind withdrawals, meaning you can take those coins and put them in your pocket in the future. Plus, they have a partnership with Kitco that lets you invest in real gold and silver to help diversify out some of your winnings. Pretty cool, right? Biggest IRA provider in the cryptocurrency game. And there's a link down below where you can learn more about what iTrust can do for you and if their solutions are right for you. And if they are, then you'll even get a $100 account starting bonus. Go check it out. Okay, let's move on to the 40s. You're getting old. You're getting these happening. Gray hairs are coming in. I'm not 40 yet, but damn close. In your 40s, it's all about leveraging the wealth that you built in your younger years. Well, in your 20s and 30s, you really had to earn your place in the world with your blood and sweat. Hopefully by now, though, you built some kind of career, you can rest a bit on your laurels. You have some kind of investment portfolio that's allowing you for a bit of passive income. If you got a bit of real estate, you got some nice dividend stocks, you got some nice staking rewards from that Solana you've been holding for 5 years. Is it not the case? You didn't do any of that stuff? Well, it's not too late, okay? It's not. If you can manage to save aggressively from now on, you should still be fine around retirement, especially if you take some good positions in crypto. It can go fast. So now you have to really double down on research, focus in on finding some winners. When it comes to cryptocurrency investing, assuming you've done the rest of the stuff already, the focus actually shifts more to compounding wealth and managing risk more conservatively. So a concentrated bet on crypto may have given you wealth at the start back in your 20s when you're like all in on crypto and all in on AI stocks, right? But as the saying goes, concentration builds wealth, diversification preserves wealth. So it's not a bad idea to cycle some of your cryptocurrency profits again, more heavily now, back into gold, back into the stock market, back into real estate, okay? And have less exposure to crypto. If you were 90% of your net worth in crypto in your 20s, you probably want to be like, 30, 40% in your 40s. Assuming you're a crypto degen, even can stomach that kind of amount. Maybe you're only 5 or 10%. Maybe you can even put money into crypto stock plays like MicroStrategy or Coinbase, for example. Now, let's move on to the 50s and 60s. So in your 50s and 60s, the priority is once again shifting to preserving wealth. You can't afford to screw up right now by taking massive bets on the new dog coin, okay? You can't. If you screw up and lose your money, you're done, okay? You need to preserve your wealth. You need to secure your financial legacy, okay? You can start thinking, of course, more about retirement, what that's gonna look like for you. You can engage in estate planning. Make sure you, in case you pass away unexpectedly, your kids and your wife and whoever knows how to get a hold of your Bitcoin, okay? Make sure that's part of your plan. You can, of course, establish trusts and stuff like that. And when it comes to investing in these later decades of your career, risk mitigation becomes critical, and your strategy should lean more on stability. So we've now gotten to the question of the mother-in-law asking you about crypto coins. So assuming that she's close to retirement. Maybe this is you. Maybe you're close to retirement. The larger percentage of investments should be in pretty dull, safe things. Cash, gold, bonds, real estate, dividend stocks, index funds, all the not exciting stuff. Not to say you can't be in crypto. You certainly can be. And I know a lot of you guys are in your 50s and 60s who are watching this video, and you are in crypto, and some of you guys are balls deep in crypto, and I love that. But man, that means you didn't make it before, okay? And that's not to say she should sell all of her assets and cash out. Sell all your Bitcoin now and cash out. No. After all, of course, the effects of compounding can increase dramatically in the later years of holding. As an example, assume that you have a $10,000 portfolio in your 20s. After 3 years of your investment journey, if you're getting an 8% yearly return, that's $800 a year, okay? At age 60, that can grow up to, let's say, $1 million portfolio if you hold and keep investing and all that kind of stuff. Suddenly, you're getting a lot of money every year. It's $80K a year. So holding these assets would mean a lot to you at that age. So you don't need to sell all your assets, only take profits from time to time, make sure you have enough to cover living expenses. Also, it's not to say that older people shouldn't invest in crypto. I certainly do not believe that's the case. It can still add a nice little bit of hot sauce to what's going on. Maybe a 5%. BlackRock out here saying 2 to 5%, and they're talking to people in their 50s and 60s, okay? Maybe 10% if you're more tech savvy and like take some risks. And again, you can redistribute bull market profits from crypto back into lower risk stuff. And on your crypto portfolio side, your advice to your mother-in-law could be to allocate a large chunk of her portfolio that she wants to invest in crypto, not her overall portfolio, but that's what she wants to invest in crypto. Again, maybe 5 or 10%. Maybe it goes like 60% Bitcoin and 40% into more established altcoins, Solana, Ethereum, Chainlink, stuff like that. Maybe if she likes gambling, she can take some meme coin risk, but like we're talking a very, very tiny percentage here. You know, if she's got a $100,000 crypto portfolio, yeah, put $500 into the Trump coin or $500 into the dog coin. Have a bit of fun, but don't be silly, okay? Because that can go to zero very quickly. And remember, what happens in Vegas stays in Vegas, okay? Building wealth requires an approach tailored to your age and to your financial stage. And this is a very broad stroke because some people in their 20s might have already made millions. Some people in their 60s might be starting with nothing, okay? So a lot of different ways we can look at this here. But generally, your 20s are for earning, your 30s are for scaling, your 40s are for compounding and refining, and your 50s and 60s are for preserving your wealth and planning out your legacy. No matter where you are in this stage, I hope that you've well prepared. And if you have not well prepared, guess what? There's always time to invest. And the best time to invest was yesterday, and the second best time is right now, today. Thanks for watching.